The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the fantastic Friday, December 14th edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. How about we have an extraordinary one? And of course, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check on the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and most importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, we've got you covered. You can always send me an email. Let those fingers do the walking. Steve@TFNN.com, just inside the subject heading, please put radio show question and in the Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on fabulous, fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes with a nasty throat. But nonetheless, I'm here. Of course, this is Tiger Financial News Network. So let's go ahead and get this show started. Right now, we've got the Dow down about 396 points. That's off about 1 6/10%. S&P's off 1 4/10% or 36. NASDAQ 100 down 1 6/10%. That's 111 points to the downside. Russell's off 11, semis down 7, trannies down 97. So it's mean and red across the board. Spot volatility, that's trading up nearly 5% at 21.65, well above all of its forward futures contracts out there. So here we go, back to the backwardation. Gold is off $4. Silver down 16 pennies. That's a little over 1%. To the downside, where light sweet crude is off 2.5% or $1.30. Leading the charge to the upside, it is Belmont Limited, but I think that is on a buyout. I'm sure it is. So that's up 40%. XPO Logistics, that's up 12%, up 570. Mogu Inc. is up 5. Middlesex Water is up 4. Oxford Industries up 350. To the downside, it's Amazon leading the charge off $35 or 2%. Shopify down $19 or 11%. Costco down 18 or 8%. Booking Holdings off 18. But that's just under 1% to the downside. First question in, only question in, is from Ruby. Ruby says, can we take a look at the NQ, please? We can, Ruby. So if we take a look at the NQ, I don't know what time frame it is you want to look at, so why don't we look at multiple time frames out here. For Ruby and for you, let's go take a look at the NQ, whoever you are, and take a look at the short term. Let's start with a 30-minute time frame chart. Here, what we can see, Ruby, is price have been moving lower, doing less relative energy out here. No bullish reversal signal yet, but if we did, and we were to see price close over 66.94, that would say anticipate a rally. Now, the rally would be up to 67.40, and if you can clear that, then you're looking at some type of short-term change in trend. That's what I see when I take a look at a 30-minute time frame chart. Potential, but not yet been confirmed. If I look at the go from the 30-minute to the 60-minute time frame, let's just do that. In the case of the hourly time frame, we can see a similar style pattern, meaning that price has been pushing lower into that move about 2 hours ago, pushing lower, doing less relative energy, similar to the high that it formed out here back at around December the 12th or 10th or 11th, whichever the day that was. But let me just say that it was the trading day. Well, come on, don't do that to me. I hate when it does that. That's December the 12th out there. So if price can get above Stevie's red line, which you would anticipate, Ruby's a move to 67.11, Above that, then 67.36. That's what the NQ message is on the 1 hour time frame. Let's continue on here. Let's mosey along. Let's take a look at the 2 hour time frame out here. What do we have on the 2 hour time frame chart? Not much. We don't have anything that is a bottoming signal that I see when I take a look at the 2 hour time frame chart. Other than I can share with you 67.34, the top of its box is a resistance zone. That is the 2 hour time frame. We've got more. That's a beautiful thing. When we say we've got more, let's go take a look at the 5 hour time frame. Let's go see what its chart shows us. Well, interestingly enough, the bar that we're in, Ruby, is going to end. The session is going to end at 2, and then the next bar is going to go ahead and end at the close of the contract today. But the last bar was bar number Tom DeMark setup 9-count system was bar number 7. Looks like this bar will be bar number 8, and it's possible that as we come into the closeout here, you'll get to bar number 9. Now, why is that important? Well, these 9s can be, not always, but they can be areas where you see a turn. It can also just be a slight hiccup. It can be a consolidation out there. And if you're wondering, do these work? Well, just take a look at this. Look at the 9 count out here. That's the blue arrow I just put at the top. Hopefully you're watching us on TigerTV. But if you're not, I'm referring back to a high that came in at 4 o'clock in the morning. That was on the trading day of December the 13th. When you get that TD, that Tom DeMark setup 9 count, it can be the bar before, the bar of, or the bar after, where you see, in this case, the high or the low. This was the high. This was back on bar number 8. Maybe today's bar number 8, that's going to end at 2 p.m., would be the low. Very interesting. Here we can come back and we can take a look at the time period of about 11 o'clock at night. This is back into November 20th. Here we had a Tom DeMark setup that, in essence, identified a bottom out there. Does it always work? No, it doesn't. Because we can come back here and we can take a look at, here was your hiccup. This was on the trading date about 11 o'clock at night on November 28th. A little bit of a hiccup, sideways move, and then price went on because there was a strong move to the upside. We can see that because price was above Stevie's green line. Price had just come back and tested it and rejected it on the way up. Now what we have here, Ruby, is you can see that during this session, price attempted to get over Stevie's red line on a 5-hour time frame, was unable to do that. That's your resistance zone. About 67.35 is the number. But something to think about. We take a look at the 5-hour time frame chart. Of course, if this chart is telling you a picture, it's telling you that there will not be much of a rebound today. That's how I would read the NQ 5-hour time frame chart. But the only rebound that it really needs to get, Ruby, and I'm sure that that's what you were asking me, even though you probably weren't, is it just needs to get a rebound to get price to close over 67.06. That's the daily Stevie red line, oscillator unchanged line level. You stay above that, and it still has bottoming signals that say, hey, I want to head up into that 7,000 area, 7,000 to 7,040. Yep, Ruby, there's your NQ for you. You got a 5-fer, I think. 1, 2, 3, 4, 5. Steve Rhodes with TFNN. Dow's off 379. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. I figure if one person has a question, that means somebody else has the same question. And this was for Maria inside the Tiger's Den during the break here. And her question was, where is Stevie's red line? And she was right. The number is 2651 and a bit of change out there. Now, what we can see about the ES Mini, Maria, is that the resistance is, as we know, is Stevie's red line. We can see that, excuse me, for the entire week, that price has tried to get up over it, and it's been rejected. And this earlier this morning, late last night, actually it was late last night, the ES Mini tried to do the same thing. Now, when we really, your role and my role, each of our roles out here are to be able to find some tools to help us identify support or resistance, because that's typically where price is headed to, or you want to see if it's going to break either of those levels to figure out where's the next area that price is likely to head to. In essence, that's really what we do out here. What we can see when we take a look at the ES Mini, Maria, is the very bottom number on my chart out there is at 2609.98. That is technically the price point of the bottom of the TAS market profile. But you and I know that price can't trade there, so we'll call it 2610. So price right now is trading between support, 2610. I don't have any of the other lines on here, just simply showing the bottom of the box. So it's trading between a range of support and resistance. We know resistance, Stevie's red line, 2651. Now, if support breaks out here, well, then that says you can go test the bottom of that hammer. But here's what we know about the ES Mini. To the extent that you like to use that seventh wave move, part of the Chapman wave counts, not the Chapman wave system, well, the hammer candle that formed a few days ago, this was on the trading day of December the 10th. That was wave number 7. That was a Rhodes momentum indicator signal. It has not been confirmed in the ES, Maria. And as you know, it won't be confirmed until price closes over Stevie's red line. So 2651 is a number. I wouldn't anticipate or expect that that's going to unfold today. Of course, anything can happen in these markets. But right now, the ES Mini trading in between support and resistance out here. So even though that's a little bit more than what you asked for, that's what it's doing. And I didn't want to give you one number and maybe have you think one thing when maybe there was a little bit more to the picture out here. Now, Ruby asked a good question, very good question, which was, Steve, are our markets, meaning the U.S., are they weaker or stronger than the markets in Europe and Asia and so forth. So the way that I will answer that question for you, Ruby, of course, it all depends on, I suppose, time frame. But here, this is a chart of 9 different ETFs that you at home can follow. And these represent what's going on around the world, so to speak. So in the upper left-hand corner, you've got the Dow. Next to it, you've got the UK. You've got the United Kingdom. EWU, by the way, is the ETF to track that index. If you want to take a look at what's going on in Australia, it's EWA. That's then on the top row, very right hand, panel number 3. If we go down to row number 2, you've got Canada. I like to say Canada. For what reason? I have no idea. Then you've got next to it China. And then next to that, you've got India. So now we've got to look at, again, as we go across the globe out here. And then we step down, you've got Germany on the lower left. You've got Japan, dead center on the bottom. And then you've got the emerging markets, which is a whole sundry of different countries that are in there. Now, what you see on my chart out here is you see a top line, which in essence represents a trend. You can see that with the exception of the Dow Diamonds, you can see that each of those ETFs for all those countries are in a decided downtrend. Then what I have shown here for you, Ruby, is you can see I've got the bottom from a weekly perspective. That is the bottom of the February 5th week out here inside the Dow Diamonds. And so when I take a look at that, that is the clear consolidation for the Dow. And this is how I answer your question with regard to where is it that money is piling into? Where is it that traders are comfortable? Because the reality is, and look, I'm in this business, so I have the boob tube on during the day, and I do a lot of reading with regard to the market and what people think and stink and stuff like that. Of course, they may say the same thing about me, but all this talk about recession, interest rates, tariffs, just a lot of BS with regard to why the market's doing what it's doing and what the market is doing out here. You turn on the news today, and maybe you'd see that right now the Dow is off 400 points or what have you, and you would think the world is falling apart. For goodness sakes, and I didn't want to say goodness, but I do want to say goodness, because for goodness sakes, look at the screen. When you take a look at the upper left-hand column out there, tell me what kind of market condition we are in right now. Are we really in a market condition where things are falling apart in the U.S.? Heavens to Betsy. Where's that come from, by the way? Heavens to Betsy, no. No. We're in a simple consolidation that can be frustrating, can last for a long time out there. That's right, Duff. We're consolidating. That's all we're doing in the U.S. How often do you really hear that on the boob tube out there? We're consolidating. That's right. What are they doing in the United Kingdom next to it? They're trading lower. Well lower. They're below the February swing point. They actually hit a lower low today out here. How about in Australia? Look, they're trading lower than where we're at in the U.S. They're trading into their October swing point out here. What are you doing in Canada? Lower low, so downtrend. What are you doing in China? Okay, again, everything around the globe. Take a look at Germany, take a look at Japan, take a look at emerging markets. So, Ruby, does this answer your question? So as opposed to me answering your question and then you wondering, did I just pull that out of my Funk and Wagnall's dictionary or encyclopedia or what have you, or just simply did we just go take a look at the charts and say, what are the charts telling us? Where's the strength? Where's the money pouring into? Is the money pouring into Germany? Now, look, this chart is not showing us what's going on with regard to worldwide capital flows. I agree. But part of understanding worldwide capital flows is realizing that we're the big dog, the U.S. So if markets are making lower lows with regard to how they're priced in U.S. dollars, guess what? They're likely doing the same inside those other currency pairs. Whereas inside the dollar, since you asked, and look, I'm not saying that we don't have some problems here, some issues. We're in a consolidation. Let's really not overlook that. Where might I have put this? Probably right here is where I put it. So here's the Dow. Here's the longer-term chart out here. The reality is the Dow priced in pounds, as an example, is trading above the top of its consolidation. It's well identified on our screen out here where that consolidation level is. With regard to the yen, it's struggling. So in terms of yen, it's within the consolidation, still making higher lows. This is a monthly time frame, by the way, that we're looking at. If we take a look at the Dow price in euros, it's flirting with trading back inside the consolidation. 21,461 would be the number. If it closes the month, that's not today, by the way. Today's only the 14th. Closes back inside here. Well, that could be a signal of some early problems in 2019. But the Dow, just simply in the consolidation. If you're wondering where the money is flowing across the globe, and you really have to take that into consideration, and basically you don't hear anybody talking about that. As bad as things are, my goodness, they're not bad. We're trading in a consolidation, for goodness sakes. That's all it is. Yes, the U.S. faring much, much better, and will for time to come. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So a couple questions that have come in. One here from Kay. Kay is asking, can we look at Johnson & Johnson having a horrible day out there? Trading down right now 134.08. Today's volume about 40 million shares on a story that's out in the press. To the extent of how much of it is true or not, we don't really know at this stage out here, but we do know how traders are approaching this at this stage, and maybe similar to the way that Kay is, because Kay is short. at this stage here, and she's just wondering if we take a look at the charts, can we get a feel for where it might be going in the next couple of weeks? So okay, one of the things that you'll certainly want to take a look at today is probably the price of 135.53. We're trading below right now, 134.03. But if price were to hold 135.53, that's the bottom of its weekly profile. My apology, the weekly profile. If we were to look at the volume metric, we would say, hey, look, it's pushing into a prior swing point. That's the week of October 8th, which had 35 million with twice the volume. So you're pushing lower. You know, price should get down there and at least test that low. That low, by the way, is 132.23 out there. If price closes below it, because price is pushing into that swing point, when I say below it, I'm referring to the bottom of the weekly profile, then that message is, okay, you're probably more likely to go at least test that area sooner than later. And then you'd want to go ahead and take a look at that test to see what information it produces for you. That's what the weekly chart is communicating to me. We can see here on a weekly basis how this thing had retested its highs. The highs out here from January in a weekly time frame, January 15th, the week of 33 million shares, the following week 53 million shares. And when it was tested, it was with 31 and 70 and 39 million shares. So it was tested with lighter volume. Says if you can't bust it up, maybe you're going to bust it down. So now you're asking for a longer-term price target. The longer-term price target, just simply based on that, is its consolidation. And its consolidation would take you back potentially to the May 28th low, or the candle session, which is between 121.58 to 118.62. I get all that information, excuse me, out of the weekly time frame chart. If we look at the monthly, now the monthly is not over, but you can see here the monthly, you can see where on a monthly basis, the month of January, nice little shooting star candle, that is bearish out here. Price went down and did what? It tested the bottom of its monthly profile. It did that in May of 2018. It found support there. Where the new market profile out here, which is bullish in structure then, gives you a price target of 121.59. It does not mean that's where it's headed to in the month of December. It could be January. It could be February out there. What you'd want to do is see price continue to stay below the top of that profile level, and that is 136.44. So that's what I see when I take a look at Johnson & Johnson. I hope that helps you out. I don't know if we look at the daily time frame, if it's going to really help us a whole heck of a lot out here. I think what you do is go pay attention to the weekly and or the monthly numbers. You know, congrats on the trade. I don't know how many options contracts you have out there, but there's certainly never anything wrong with taking advantage of a day like today before Johnson & Johnson gets ahead of the story and maybe turns the tide, so to speak, gets out some additional facts, whatever they may be. Chances are there is something else that's going to hit the wires, which maybe turn it around a tad out there. The other question that came in out here was, where was it? It was from Monty Python? No, it wasn't from Monty Python. It was from Coda. Okay. And he was asking if I'm using any sentiment or advanced decline indicators, or if I am, can I please discuss that as well with regard to the markets, I suppose, is what he's referring to. And I'm not using any sentiment indicators. If you wanted to, you know, you could get the investor sentiment indicators, the bull, the bearish numbers that are out there. And if you download that information, I used to download that information, build a spreadsheet around it, the percentage of bulls, percentage of bears, and I used to just simply throw a Bollinger Band. Yeah, Bollinger Band, upper and lower out there. And sometimes you could use that as a sentiment indicator when everybody was on the wrong side of the boat, so to speak, out there. As far as the advanced decline information, you know, I do like to use the advanced decline oscillator reading. That happens to be panel number 2 when it's below 0, and right now it's at minus 110. That says that sellers are in control. But let's face it, you did not need me today to give you that message. You already knew that. Now, when I say you, I'm referring to all of you. And it's making a lower low. So the advanced decline, panel number 2, is making a lower low out here. But the interesting thing is, and here's where you can take a look at maybe a divergence. Can't necessarily use it as timing, but it is sending a message to you. Now, the top panel is New York Stock Exchange. And what I would say is, Cody, you go back and you can test this, and you'll say, oh, that's kind of interesting, because that works. You pay attention to that. And what I'm referring to is on the bottom panel of my screen is the spot VIX index. And if we take a look, let's just draw a little red line here. That way it's a little bit easier for us to follow along. If we take a look at that, see how the spot VIX index, and well, I didn't mean at that line. Good Lord, Steve, well, grab the right tool, for goodness sakes, out here. Here's the red line. I don't know. Well, we'll make it red. I don't have a choice. I do have a choice. But see how it's making a lower high today? And see how price is making a lower low today. Those are the types of divergences that, if they don't go away, end up being a signal of the next move being some type of bottom that's trying to form out here. When was the last time we saw that? Well, if you take a look at, price was going lower between November 20th and November 26th. You can see that. Now, I don't have that red line drawn, but I'll go ahead and do it here right now so you can see how this thing can actually work here and take a look at the VIX, right? So you and I, we don't take a look at the VIX and call it the fear index or something and say, because it's priced at 21.98, that nobody has any fear. I mean, you want to talk about worthless information? That basically is the icing on the cake out there. What someone should be doing is saying, well, this is interesting. You've got the on a closing basis, the spot volatility index making a lower high, and you have price making a lower low, price inside the New York Stock Exchange. That's the type of sentiment indicator that can help you to understand what the markets are doing. Then you've got to look for other levels of support or patterns that would show where there might be a turn. What, do you think I just make this stuff up? Come on, give me a breakout here. If you take a look at the New York Stock Exchange between October 24th on a closing basis and the lower low that it made on October 29th, and if we take a look at the spot volatility index, which on a closing basis on the 24th was 25.23, and on the 29th was 24.70. So you can see it was making a lower high out there. So, Code, I don't know if that's what you were asking for. Maybe you got more than you asked for. So just put an extra quarter in that machine out there. And actually, at this stage here, I'd say a Hall's Mentholyptus lemon is my preferred flavor out there. Where this sore throat came from, it was like out of the blue. Out of the blue. So there, Steve-O's New York Stock Exchange spot volatility index and price comparison divergent pattern. I just named that. It's a pretty cool tool. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So no other questions in here. You can always give us a call at 877-927-6648. You can let those fingers do the walking. You can get an email to me, Steve at TFNN.com. Just inside the subject heading, please put radio show question. If we take a look at what's going on from a volume standpoint on a Friday out here, presently in the queues, you've got volume of about 28 million shares out here. Now, the last time being the trading day of December the 10th, when price had moved lower, was with 74 million shares. We're somewhere south of 50 million shares on a straight line basis. Go ahead, divide 28 million times 3 3/4 times 6.5, and you'll come up with a number. So somewhere south of 52 million shares. Now, it hasn't tested, and maybe it's going to today, tested the November 20th swing point, which has 100 million shares. The top of that is 161.38. So far, the low today is only 161.66 out here. But what we do know is that from the QQQ perspective out here, volume is very light today, very light. If we take a look at the, let's look at the SPYs, see what the SPYs are doing. The volume in the SPYs are going to be south of 112. At this stage, straight line method, somewhere south of 112 million. You're at 59 right now. Last time, when price had moved down, it was with 151 million shares. Again, that was December 10th. And then the time before that was 160 on October 29th out here. So you're just seeing where, there's not a lot of enthusiasm. Yes, I know the world is falling apart, or the U.S. is falling apart, but traders aren't really jumping on that bandwagon to say that things are really falling apart. That's the SPYs and that's the Qs. What about the IWM? The IWM making a lower low today. That is going to do maybe 20, well, south of 23 million is what it looks like. You're at 12.6 right now today. Last time price was down here was on December 10th, 31 million shares. Now, price is below that low of 141.45. You're at 141. I take that back, 141.54. So watch 141.45 out there. Looks like it's going to be lighter volume. That would be a test and rejection of a prior swing point, let alone the February 9th swing point, which had 53 million shares. So the IWM, the worst, the weakest of the indices, not exactly like everybody is piling onto that. Let's finish by taking a look at the Dow Diamonds out here. Now, the Dow Diamonds, you and I had looked at this, and we went ahead and decorated the chart sometime during the week. Well, it was probably here in the trading day, I'm going to guess, either December 10th or maybe December 10th or December 11th out here. But today, what you have is 3.7 million shares. Now, 3.7 million shares is somewhere in the 6 million-ish range. 6 something. Last time down here was with about 6 something out here. And that was on the trading day of December the 10th. And then before that was 6.8, 5.5, 6.1, 9.2, 20 million shares going back in that February timeframe out here. So at least with regard to 3 of the ETF structures out here, what we can see is you've got light-ish volume. What do you have inside some of the sectors? Let's take a look at the XLK. But if the Qs were light, you would expect inside the XLK for the same kind of thing to be taking place out here. You've got 7.9 million shares on the 10th. That's what it's trading into. It had volume. Well, let's move the volume thing so we can look at it. 21 million shares, 20.4 to be exact. So mucho grande light volume. That obviously just butchered my Spanish there. And then if you take a look at the November 20th area, that had 28 million shares. Now, to reject that level, this is the XLK, you'd want to see a close above 65.07. You're at 64.94 right now. The financials, let's take a look at the financials. What are the financials doing? Well, they're trading lower. They're actually trading below the swing point. I believe they are. The low is 24.30. No, they're testing the December 10th level. That had 101 million shares. You're at 37 million shares. We don't need to do any kind of straight line math. We can double it and say you're way short on the volume out here. But what does that mean with regard to the XLF? Is there anything else that you and I should be aware of inside the XLF? I don't know the answer to that. Why did you ask? That's the question I would ask you. Why did you ask? Why ask a question that you don't know the answer to? Hey, I guess that's what you get to do here. So, but let's go find out. And I don't know if there is. Let's take a look at it. What do you have going on? What do we have going on in the XLF? Well, we do have price moving lower with less relative energy. Okay, that's interesting. Oh, what else? Oh. What else do we have out here? Well, looks like today is going to be day number 8 in the Tom DeMark setup 9 count. Now, does that matter with regard to the XLF? Well, by goodness, it does. Or at least it did the last time. What do you mean the last time? Well, if we take a look at the trading session out here in the XLF, that's on the trading day of November the 8th. That formed a Tom DeMark setup 8 count. Today's going to be an 8 count. That was the high. Remember, the following day, which was the 9 count, and that means you'd have to wait till Monday to get the 9 count because you have to get a close below the bar 4 bars earlier. So that would be 1, 2, 3. That would mean a close below the bar of December 11th. That price, by the way, was 24.52. That could give you the 9 count. You don't have to make a lower low on Friday. You can, but you don't have to. Out here says, well, something to think about. How about rates? I'm not interested in rates. I'm interested in the patterns when we take a look at the XLF out here with regard to patterns that have been reliable for tops or bottoms. And so in this case here, moving lower, doing less relative energy is one of them. Moving lower with lighter volume, I don't think we checked that. We checked that out. That would be another one. Tom DeMark set up 9 count. Well, you don't have that 9th count just yet, but we can take a look at the formation of that. And we'll just let rates kind of deal with rates and buyers and sellers deal with where they believe there's value to either buy or sell out here. So I would just say, just pay attention. Remember, the world is not coming to an end out there. That's the message as I see it when I take a look at the XLF out there. Yes, very far away from Stevie's red line. No doubt about that, Mr. Bill. For those of you listening, the red line number is 2509 out there. But, Mr. Bill, and I know you saw this too, if you and I were having the same conversation on November the 8th, when there was a Tom DeMark setup 8 count, would you have said the same thing? Hey, that XLF is pretty far away from that red line. Yes, we would have. So what we're looking for is a leading indicator versus, and what we're discussing here is leading indicator versus a confirming indicator. Stevie's red line, or sometimes it's a green line, is more of a confirming indicator of a change in trend that's underway. It's never, it's but it's for the most part not going to be a leading indicator. A leading indicator is going to be more like A to B equals CD pattern, where you have a price projection, you're looking for a price target, and then you're looking for a bullish reversal signal. Similar to maybe wave number 7, like we have in the S&P 500, or Rhodes momentum indicator. And yes, but the line was still red. big stall. And it was a red line, meaning that the price oscillator was below zero. So I'm not saying go rush out and buy the XLF, but we should watch this over the next couple of days out here to see how this potential Tom DeMark setup 9 count works. Just telling you. Hey, Tom was a pretty smart guy. I actually like the tool. Works a lot. Steve Rhodes with TFNN. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So it looks like we're going to finish out the session, or at least a good portion of it, taking a look at Walmart, and that is for Hot Dog. Sending an email request out here, and you're absolutely right that it is trading with inside this gap out here. And now the question on this is, where would you put the gap line? Would you put the gap line at the high of the session from 5, or would you put it at the high of the session from August 14th, 91.12 out there? Well, we haven't gotten down to either of those two levels, and I'm not here to tell you which one because it could be either of those, but you're trading inside there. And one would say that likely price is going to come into that gap area. So we took a look at those numbers out there. That's where it's likely headed to. The volume today is 5.4 million shares. Now, when it gapped to the upside was with 42 million shares. So it is moving lower with lighter volume. However, there is a swing point that was taken out from November 21st that had 9 million shares. And that 9 million shares was taken out with a few days ago with 9.6. So therein lies a potential problem. Is this going to be an A to B equals CD to the downside, which would give you a price target here inside of Walmart of the 1-to-1 would be 86.69, the 1-to-1 0.272 about 83.18? It's a possibility. How will we know if that's the way that it's going to unfold? Well, one way that you might want to be tracking it is we were just talking about those Tom Mark set up 8 counts. Today's happens to be, I don't know how this works, but today is also inside of Walmart going to be an 8 count. Says that today could be a bottom. I would say more likely it would be Monday with that gap being tested. And the way that these work is they either work or they don't. Meaning, what do I mean by that? I mean, they can be just a slight little hiccup. And if the momentum is, if there's huge momentum, upside or downside, you will then see the pattern fail. And so that's what I'd be watching for. I would be watching for Monday and Tuesday's action at a minimum inside of Walmart out there. And if the pattern fails, so to speak, it doesn't slow down price, you got that A to B equals CD to look forward to. So, folks, thanks so much for being here. Have a terrific weekend. I'll get some apparently much-needed rest. Didn't know I needed to rest out there. Try to get this throat in good working order for a magnificent, marvelous Monday. Take care. Stay tuned for David White and Tom O'Brien from 3 to 5.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.